morning. We will pay attention to fixed assets today and asset disposal. Asset disposal is one of the topics that students really have a problem with, and it's in the majority of cases it is because they don't work systematically. So as we do this, I'm going to explain to you where you have to work systematically to improve your knowledge and the ability to do asset disposal. Okay, first of all, if we look at the cost price of an asset, you must know what can be included in the cost price according to IFRS. So the first thing is the price that you paid for the asset. In this case, I said we purchased it for 30,000, so that will form part of the cost price. Secondly, any expenses that you have to get it to the location where you want to sell it or where you want to use it. So it means if I import an asset, I will pay shipping fees and I will pay import duties at the harbour and I will pay for carriage to get it delivered to my premises. All those expenses are paid to get the goods to my premises and will be included in the cost price and the asset value. Then any expenses to get it in a condition that you will be able to use it. So if I buy a lot of computers and we want to form an internet connection between these computers, I have to pay for installation costs. So I will not be able to use them if I don't pay for this installation cost. So that forms part of the cost price. So it means I will add the delivery cost and I will add the amount for the installation. So the value of this equipment is now actually 40,000 and not 30,000. The useful lifespan of an asset is the number of years that you think you will be able to use this asset. And because we buy the asset to use, for instance, for 5 years, I want to decrease the value of the asset over that period of 5 years, because if I don't write off depreciation, it means at the end of the time, when I sell it, I will have a very big loss. So what I do is I write off depreciation and then I split the expense of the depreciation over a period of 5 years, so the profit will be decreased with a certain percentage every year for the depreciation written off. So they will, for instance, tell you that they will write it off over a period of 5 years. 5 goes into 120%, so it means we will write off 20% per annum. Or they can decide that they want to use this asset only for 4 years, and that means 4 goes into 125 times, so it will be 25% per annum. Okay. Now, depreciation can be calculated in 2 ways. The fixed installment method is also called the straight line method, or it means that it's calculated on the cost price. So they can use any one of the 3 words. Calculate depreciation on cost price, fixed installment, or straight line. That means all of that you calculate on cost price. Or the second method is diminishing balance, and instead of saying diminishing balance method, they can tell you to work it out on the carrying value or book value. If I look at my ledger accounts, vehicles is an asset. An asset increases on the debit side and decreases on the credit side. So when I buy an asset, I will record it on the debit side because I want to increase the value of my asset. As soon as I use an asset, the value of the asset decreases. So it means that I have to show that this asset is worth less money because I've used it. Now, if I put it here on the credit side, it means that after a couple of years, I'm not going to know what was the cost price and how much depreciation I've already written off. So we go and we open a separate account for accumulated depreciation on vehicles. These 2 accounts actually form a unit. So this is the positive side of my asset, and the accumulated depreciation is the negative side of my asset. So when I record it in the balance sheet, I will take the cost price less the accumulated depreciation to indicate the carrying value of this asset. Okay, if we look at the depreciation methods, it means that they want to tell you how many years are we going to use it, and we have to write off the depreciation over this period. So in this first example, they purchase equipment on the 1st of January for 10,500. So the asset increased with 10,500. At the end of the year, we will write off depreciation at 20%. So I will take the 10,500 if I use it for the full year, and I will write off 20%. If I don't use it for the full year, I will write it off for the number of months that I've used it. And this will give me 2,100 Rand. So at the end of the first year, I will show that depreciation is an expense, and expenses always increase on the debit side. So I create an expense for 2,100, and I will credit my accumulated depreciation and indicate that I've decreased the value of my asset now with 2,100. So at the end of the year, this 2,100 will be transferred to your profit and loss account, and this is the figure that we will show in our income statement to decrease our profits. In the balance sheet, I want to know what is the carrying amount. So at the end of the first year, I will indicate that the cost price is 10,500. The total accumulated depreciation at the end of the first year is 2,100. So it means the carrying amount is now 8,400. In year 2, I have to do a similar transaction. So I'm going to write off depreciation again on the cost price, and I will indicate that my expense is 2,100, and we will write off depreciation, and I will credit my accumulated depreciation account with 2,100. Again, the amount that will go to the profit and loss is only the expense for the current year. So in the first year, we decreased our profits with 2,100, and in the second year, we will decrease it again with the 2,100 depreciation for the current year. When I go to the balance sheet, I now have to determine what is the value of my asset after I've used it for 2 years. So my cost price is still 10,500, but now my accumulated depreciation is 4,200, and if I subtract the 4,200, it means that this asset is now worth 6,300. So the carrying amount is what it is worth at that stage. Okay. If we look at the calculation in case we sell an asset, the cost price was 6,000. So we will indicate the cost price as 6,000. In year 1, we will write off 2,000 Rand depreciation. So this is a separate question to the previous one. We only want to use this asset for 3 years. So I'm going to write off 2,000. Then in year 2, I'm going to write off 2,000 again. And now if I'm still using the asset, I can't write off the full 2,000 in the third year because then my balance is naught. I have to show that I still have this balance in my possession if I haven't sold it. So I will write off depreciation 1,999. So in my balance sheet, I will indicate that I've got an asset worth 1 Rand because I've written off all the depreciation already. If, for instance, I sold the asset, then we will not show the 1,999, we will show 2,000, because then we don't want R1 in our books to indicate that we still possess this asset. Okay, the cost price of this asset will therefore be in the balance sheet the 6,000. The accumulated depreciation that we've already written off is 5,999. And that means I indicate the value of the asset as R1. Okay, when we do the diminishing balance method, it means that the depreciation of the previous year must be subtracted every time when we calculate depreciation. So if I look at question 2, I bought this asset on the 1st of January 2018 for 20,900. I've used this asset the whole year, but at the beginning of the year, the value of this asset is 20,900. Now, at the end of the year, I have to write off depreciation on this asset. So it means I will take the 20,900 and I will go and work out 40%. Okay, now the reason for the 40% is if you calculate it at 20%, as we did in the previous example, it means that you will not write off the asset in 5 years because the depreciation reduces every year. So in the diminishing balance, we will normally use a higher percentage so that you can write off the asset in more or less 5 or 6 years. So on this 20,900, the depreciation for that year is 8,360. The total depreciation that we've written off from the date that we purchased up to the end of the year is then also 8,360. And to calculate the carrying amount, I take the cost price 20,900 minus the 8,360, and that means this asset after 2 years is worth 12,540. In 2019, I have to go and take this 20,900 and I must subtract the depreciation that we've already written off, the 8,360. So on the 12,540, I'm going to calculate 40%. So it means I take the 20,900 minus the 8,360, or I can say the carrying amount equals the reduced amount at the end of the previous year, so I can just use that 2,540. And then I use this for a year and I calculate the depreciation. So the amount that will go into my income statement will be 5,016. The amount that goes to the balance sheet is the total accumulated depreciation. So we've already written off 8,360 plus this 5,016, and that gives me 13,376. Okay, then I take the cost price 20,900 minus the accumulated depreciation, and the carrying amount will then be 7,524. During 2020, I will take the 20,900 again, minus the total accumulated depreciation, 13,367, or I can just use the carrying amount of 7,524. And calculate 40% on that. So the depreciation in year 3 will be 3,010. I take the 3,010 and I add it to the accumulated depreciation at the end of the previous year, and that will give me 16,386. To calculate the carrying amount, I take the 20,900 minus the 16,386, and that will give me a carrying amount of 4514. So my carrying amount is decreasing every year, and if you look at the depreciation, it also decreases every year. Where if you use the cost price method, the depreciation will be the same for every year. Okay, then I take this carrying amount, the 4514, and I calculate 40% to determine what is the depreciation in year 4, and that's 1806. Add the 1806 to the accumulated depreciation at the end of the previous year, and now the total accumulated depreciation is 18,192. To determine the value of my asset, I take the cost price 20,900 minus the accumulated depreciation, and that gives me 2,708. Okay, in December 2022, I have to take the carrying amount again, or the costs less the accumulated depreciation, and on the 2708, I will calculate 40%. So the depreciation in year 5 that I will record in the income statement will be the annual depreciation, and that will be 1083. In the balance sheet, I will take the accumulated depreciation at the end of the previous year plus the depreciation for the current year and indicate that the total accumulated depreciation is now 19,275. To get the carrying amount, I will take the cost, 20,900, less the accumulated depreciation, and that means the carrying amount is 1,625. So the carrying amount decreased gradually over the period, but as you can see, because the annual depreciation is less every year, you will not write off this asset over a 5-year period. And after the 5-year period, although we changed it from 20% to 40%, there's still a carrying amount of 1,625. Okay, the notes to the financial statements. You must know this note very well, that you know exactly how you have to record it. Sometimes they give you the words, but sometimes you have to do it yourself. So make sure that you understand this and that you know the order. So what's required according to IFRS is that you must show your carrying amount at the beginning of the year, anything that happened in these accounts, movements during the year, and then the carrying amount at the end of the year. So to determine the carrying amount, I take the cost price and I subtract the accumulated depreciation until the end of the previous year, and that will give me the value of my asset at the beginning of the year, the carrying amount. Remember, when you subtract something, you have to show it in brackets. If you don't show that you're subtracting and you don't show the brackets, you will not get marks for it. Okay, then depreciation will decrease the value of my asset, so I will show that in brackets. The additions will increase the value of my asset, so that will be a positive figure. The disposals is a carrying amount, so it means on the date that you sell the asset, you must take the cost price less the accumulated depreciation written off from the date of purchase up to the date of sale, and that will decrease the value of my asset, so it will be in brackets again. I take the cost price and the accumulated depreciation to see what is the closing carrying amount at the end of the year. This note is asked frequently in exam papers and in tests, so you must ensure that you know exactly how to do this note. Disposal of fixed assets. This is the section that's really difficult to a lot of students, And the main reason for that is because they don't work systematically. So it means that you must follow the steps. So know the steps that you will follow to do the asset disposal. Write it out neatly when you do the calculations, and it will make your life easier. Okay, so normally we write off depreciation at the end of the year. If I sell the asset during the year, it means I first have to get my books up to date. So I will first calculate depreciation for the 3 months, for instance, that we use the asset, so that I can see what is my expense that must go in the income statement for the use of this asset during this year. And I must credit accumulated depreciation so that I can add this figure to the previous figure to see what is the total accumulated depreciation. Now, the asset doesn't belong to me anymore because I'm selling it. So it means that I must take it out of my asset account. So asset has a debit balance. If I want to take it out, I must take it out on the credit side. So equipment or vehicles will be credited, and I transfer it to the asset disposal account. Now, remember what I said. The equipment and the accumulated depreciation is actually one account. This is the positive asset, and the accumulated depreciation is where my asset decreases. So if I take an asset out of my equipment account, I can't have accumulated depreciation in this account on an asset that we don't have anymore. So I must go and determine what is the accumulated depreciation from the date that we purchase the asset until the date that we sell it, and I will take that total amount out of the accumulated depreciation account. So I will debit accumulated depreciation and credit asset disposal. Okay, now I've put the cost price and the accumulated depreciation in my asset disposal account. I want to see how much money can I get for this asset, because that will determine whether I make a profit or a loss. Now, there's various ways that you can record the proceeds depending on how you sell the asset. So if I sell it for cash, anything that I sell for cash, bank is debited. In all these cases, asset disposal will be credited. If I sell it on credit, I sell it to a debtor. So debtor's control will be debited. Now, the one where you normally have a problem is with a trade-in. So say, for instance, I buy a new asset and I pay $200,000. I bought this on credit, so it means I have to credit my creditor's control account. With the $200,000 to indicate that we owe $200,000. You can't subtract the amount that you get for the trade-in from the $200,000 and say, okay, now my vehicle is only worth $160,000. The cost price of this vehicle must remain in the vehicle account at what we actually paid for it. So that's $200,000. Now, I can either pay the creditor with money, or I can trade in my old vehicle and give it to the creditor as part payment of this $200,000. So what will I do? I will take it out of my asset disposal account and say that we get $50,000 for it, and I will show that my creditors decrease with $50,000. So therefore, when you trade in an asset, you will debit the creditor's control account. If the owner takes anything for himself, you debit drawings. If we donate something, we debit donations. If there is a fire or a burglary or an accident, if you don't have insurance, you will debit loss of sale of asset. If there's an insurance, it means that they can perhaps they already paid the money to you, then you will show bank debit, asset disposal credit. If you still have to get this money from the insurance company, you will create a debtor or an asset insurance company, or you can create a asset accrued income to show that this money must still be received, and I will credit my asset disposal. Step 5, now I've got everything in my asset disposal account. So it means I want to see whether I made a profit or a loss. So if I go to this exercise, for instance, this asset disposal, what is the asset worth? It was worth 100,000. The accumulated depreciation was 35. So the carrying amount on the day that we sell the asset is 65,000. If I sell it for more than 65,000, I will make a profit. If I sell it for less than 65,000, I will make a loss. So the fifth one is to determine whether we made a profit or a loss. Okay, so if there's a profit, you will debit asset disposal and you will credit profit on sale of asset, because profit is an income and income will increase on the credit side of the ledger. If we sell it at a lower price than the carrying amount, we will make a loss because we want to debit the expense and we will credit asset disposal. Now, in the majority of cases, you're so glad when you finish with these 5 steps of asset disposal that you forget that you must still do depreciation at the end of the year, especially when you do financial statements. So at the end of the year, you will still have to calculate depreciation on your old assets that was purchased during previous years, but that you are still using at the end of the year. So it means you write off depreciation for 12 months. On new assets that we purchased during the year, we will write off depreciation for the number of months that we used it in the current year. Okay, I'm going to do question 3 now, and here I will explain the asset disposal transactions in more detail so that you can understand what you are doing. Okay, the first thing that's very important, you must determine if this balance that they give you, the trial balance, whether this is the closing balance or the opening balance. Now, if I look at the other entries, they're all 2023. So it means my financial year is from the 1st of January up to the 31st of December 2023. So that's where I have to record the entries. So because those balances are at the end of 2022, this will be my opening balances. So I will put that in my accounts there. Okay, on the 1st of April, an asset with a cost price of 100,000 and accumulated depreciation of 30,000 on 1 January was sold for 80,000. Depreciation is written on cost, so I don't have to take into account accumulated depreciation for the previous years when I do the calculation. Okay, so the first entry that I have to record is to calculate the depreciation for the current year. So I use this asset from the 1st of January and I traded it in or sold it on the 1st of April. So I actually used it up to the 31st of March. The cost price of this asset was 100,000 times 20%. And I only used it for 3 months, January, February, March. So times 3/12. And that will give me 5,000. So first of all, I update my accounts to indicate that there's depreciation of 5,000. So I will debit my depreciation account with 5,000 and I will credit my accumulated depreciation, and remember all 5 of these entries will be recorded on the date that you sold the asset, so it will be on the 1st of April. and I will show there that the accumulated depreciation account will be credited. So this is my first step. And my accumulated depreciation now increases with another 5,000. Okay, step 2 is I have to indicate that some of these vehicles are now sold, so I don't have them anymore, so I have to take them out of my books. So my vehicles account will be credited and I will transfer it to my asset disposal account. And the cost price of this vehicle was 100,000. And I will transfer this vehicle to my asset disposal account on the debit side. Okay, now remember, these two accounts form a unit. So it means if I take out of my vehicles account, I must also take out of my accumulated depreciation account. So we have to see how much depreciation we written off on this asset from the date of purchase to the date of sale. They tell me that the accumulated depreciation was 30,000 on this asset at the beginning of the year. So it means that there was already 30,000 written off. That's included in this 90,000. And I wrote off another 5,000. So it means the total depreciation written off since we purchased the asset was 35,000. So I will remove the 35,000 out of my accumulated depreciation so that the amount that's left over will only be depreciation on vehicles still in use. And I will show that I will record this on April the 1st, and this will be transferred to my asset disposal account. Okay, so this is step 3, and I will transfer it to the credit side of my asset disposal account. Then I have to look and see how much money did I get for this asset. And we sold it for 80,000 cash. So the bank was debited and asset disposal is credited with 40,000. The whole purpose of this asset disposal account is to record all the information about this asset in one account so that we can see if we made a profit or a loss. The carrying amount of this asset is 100,000 minus the 35 is 65,000. If I sell it for more than 65,000, I make a profit. If I sell it for less than 65,000, I will have a loss. So I sold it for 80,000, so it means I sold it for a higher price and now I made a profit. And I will go and open an account, profit on sale of asset. And I will credit this profit on sale of asset to indicate that we've got an income that will increase my profits with 15,000. Okay, so I've done the entries now for the 5 entries that I must record for the asset disposal. Then they tell me that we bought a new vehicle on the 30th of June. So my vehicles increased on June 30. We paid with the EFT, so the bank account was credited, and the value of this vehicle is 140,000. Okay, now I'm still using some of this old vehicles because I had vehicles with 300,000. I took out the one that I sold with a cost price of 100. So it means on that 200,000, I still have to write off depreciation for the full year because I'm still using it at the end of the year. And on this new one purchased, I will work out depreciation only for 6 months because I purchased it on the 30th of June. So it means when I do this depreciation, it is very important that you must split your page in three so that it's written down systematically and that you don't make mistakes. So you don't have to write that full sentence. You can say sold, old, new, to show that's the calculation. Now the one that we've sold, the cost price of that one was 100,000 times 20%, and we only used it for 3 months, and that gave me 5,000 rand. Then on the old one, we've used for the full year. So it means we had 300,000, we've sold 100, so the value of the vehicles that we are still using is 200,000 times 20%, because I'm still using it at the end of the year, and that will give me 40,000 rand. Then on the new one, I have to work out depreciation for the number of months that I used it. So on this 140,000, I will work out depreciation for 6 months. Okay, and that will give me 14,000. Now that 5,000 was already recorded when we recorded the asset disposal. These two, both of them, the calculation is on the 31st of December, so I must add them together and indicate that the depreciation that I must record at the end of the year must be 54,000. So on December the 31st, I will indicate depreciation that is written off at the end of the year, and this depreciation will then be the 54,000. And I will debit my depreciation account with 54,000. So it means my total depreciation for this year that will go to the profit and loss will be 59,000. And the profit that we made on the asset that we've sold, I will transfer this 15,000 as an income to my profit and loss and balance sheet. Okay, then I have to go and balance my ledger accounts. So the debit side of vehicles is 440,000. If I subtract the 100,000 on the credit side, there is a balance left over of 340,000. The balance is calculated at the end of the year, and I will transfer that to the next financial year. Okay, so that is the total value of my vehicle, the cost price at the end of the year. I will also add up my accumulated depreciation account, and the total is 149,000. Subtract the 35,000, then on December the 31st, the balance that's left over in your accumulated depreciation account will be 114,000. And if I add up, I will get the same total, 149. And I will bring down this balance at the beginning of the next financial year. So if I look at my ledger at the beginning of the next year, I can see that I've got vehicles that I'm still using with a cost price of 340,000, and on that 340,000, we've already written off 114,000 rand. Okay, we're going to do a note for this now, and I'm going to take my ledger accounts to do the note. So if I look at the vehicles, the opening balance was 300,000. So I will show the cost as 300,000. Then I will look at the opening balance of accumulated depreciation, and that was 90,000. I'm going to subtract the 90,000, so I must put it in brackets, and that means the value of my vehicles at the beginning of the year was 210,000. Okay, so according to IFRS, you have to show at the beginning of the year what is your cost, accumulated depreciation, and carrying amount. Then you have to show all the things that happened during the year, and then you have to show the carrying amount at the end of the year again. Okay, now depreciation. We've written off that 5,000 and we've written off 54,000. So it means we've written off 59,000 during the year. So here I will indicate that the value of my vehicles decreased with 59,000 during the year. This is the amount that will appear in your income statement. Okay, then we added a new vehicle of 140,000. So the 140 will be a positive figure because it increases my asset. Where the depreciation will be in brackets because it decreases the value of my asset. Okay, then you have to look at your carrying amount. So I will take this 100,000 cost price less the accumulated depreciation of 35. Or you can use it in your asset disposal account and say 100 less 35. So it means that I decrease my assets with a carrying amount that is 65,000. Okay, I will use my vehicles, the closing balance, and say the cost price of all the vehicles that I'm still using at the end of the year is 340,000. And then I will look at my accumulated depreciation and say that the total accumulated depreciation at the end of the year is 114,000, and that will give me 226. Now what you have to do is you can go and click and make sure that you've done everything properly. Remember that every single figure that's here in the vehicles and accumulated depreciation must be recorded in the note. If you leave out any of these entries, you will not get the correct answer. So I will take the carrying amount at the beginning of the year, and I will take these three movements into account. So minus 59, minus 65, plus 140, and that should give me the same total. If it doesn't give you the same total, it means that you made a mistake somewhere.